All right, John, you want to get started?
Yep.
Okay, great.
All right. Are you live streaming on Facebook?
I am. It's on my Carol.fahy Premier Properties page, and I just shared it to my personal page. Did you find us?
Yep, I got it.
Yep. That's Premier Properties page, and I just shared it to my personal page. So I'm going to mute that so I don't hear it, but I have it open so I can see any questions that might come in. So hopefully we don't miss anything. I see a couple of you coming in now. Hi, Tanya. Thanks for stopping in and watching us today. This is John Thomas. We're going to go over different things that have taken place in the real estate market and the mortgage markets over the last week. Just try to provide some helpful information. John, you want to start? You want me to start?
I'm sorry, I was live streaming. So what I would say to start off with is that first thing is real estate is happening in Delaware. The governor's order did say that mortgage banks are essential personnel, so they're able to work, close loans. So we are closing loans, still, getting through stuff. Real estate agents are allowed to show homes. They are allowed to write contracts. They are allowed to put new listings in, so we can still do business. It's still a great time to buy. Interest rates have rebounded and they're low again.
Yeah.
There are different programs available to help buyers, which we're going to talk about. So even though we are in the middle of the pandemic, it is still a great time to buy. And there's still people working. The attorneys are still able to close the loans. So I'm not going to say business as usual, but we're still able to move forward. And all same thing with refinancing. If you do already have a house, the rates are really low. It's definitely an opportunity to look forward to a refinance as well.
Absolutely. And just to piggyback on that, this week alone, 268 new houses have come to the market. 117 homes just in Newcastle County have gone pending, which means they're under contract and have been sold. 178 homes have actually closed, so they've gone through those final stages, and we have 178 new homeowners here in Delaware, so that's exciting. And in total, all the way around Delaware, 224 homes have actually gone under contract. And keep in mind, that's just residential. That doesn't include any new commercial transactions that have transpired in just this last week. So that's exciting.
Right. So we're still doing business.
Yes, absolutely still doing business. We are taking all the necessary precautions, but we are out and about and we are actively doing business. So why don't you tell us a little bit about what's going on with the interest rates?
So yeah, great question. First of all, there is no 0% mortgage rates if you haven't figured that out yet. The Fed a week ago lowered the Fed funds rate to 0%. The Fed funds rate is it's money lent from the Fed to the banks to keep the banks liquid, so that they still have the ability to give depositors money if they ask for their money back during this crisis. People, taking $5,000 cash out, $10,000 cash out because they're worried. That could be a run on the bank. So the Fed have provided liquidity. The Fed had the Fed funds rate at 0% from 2009 to 2015, and we never had 0% mortgage rates. So there's a little confusion with that the Fed funds rate is not mortgage rate. So the mortgage rates came down, but actually spiked back up. Almost in one day, they were up 1%. And that's because there's a liquidity crunch in the market. Now, the Feds have stepped in starting this past Monday, buying mortgage bonds, $50 billion a day. So that's put liquidity back in the market. And that's what's basically moved interest rates back down. But one of the challenges you have, banks are overwhelmed with loans because the rates had dropped. So if you are out looking to purchase a home, you want to make sure you're working with a bank that can close your loan in a reasonable amount of time. Because I think Bank of America and Wells Fargo, they're all like 120 days plus because they can't literally close the loans they have. Just to put in perspective, the most mortgage banks have ever closed in an entire year is $3 trillion.
Okay.
Well, in a 3-week period, there was locks of over $6 trillion. So you've got banks trying to figure out how to close in 3 months what they've never closed in an entire year.
Yeah.
So that's why it's very important to make sure your bank, if you're a buyer or an agent, you've got a bank that actually is in the ability to take on a new loan and get it closed in the time frame with the contract. So not, all lenders are going to be able to do that, and that's key. Some banks don't even want new loans. So they've raised, even though the rates have come down, they've raised their rates because they're pretty much saying, look, we don't want your business because I've got, thousands of loans I got to figure out how to close in the next 2 months. I don't have the ability to close your loan. The other thing that banks do is they have what's called a warehouse bank. So when they fund your loan, they fund it on a short term, almost like a home equity line of credit. And then when they deliver it to Fannie or Freddie, it gets sold off that warehouse line. Well, there's a capacity for that. So, like ours is, I think we upped it 300 million. It was like 1.5 billion. Now we're at 1.8 billion because we literally almost ran out of warehouse line in 1 month because of the rates dropping. So we went and got more warehouse capacity to be able to fund loans until they sell off the line. So that's the other capacity issue in the market. So that's why the bank you're working with is going to be huge at this point to make sure you get to the closing. The other thing I want to point out is Delaware has some different programs for first-time home buyers and even second-time home buyers. Those programs are still going right now.
Excellent.
There was a little glitch when the market liquidity dried up. Delaware State Housing Authority offers between 2 and 5% assistance on their Preferred Plus program. The 4 and the 5% were suspended. Now they're all back except for the 5. You can't get the 5%. You have to get between 2 and 4. And the rates had spiked up, but the rates, I just give an example. The rate last week was 5.75 on the 3%. There was no 4 or 5. The week before, the 5% was 4.25. Well, just today, the 4% assistance program has a rate of 4.625.
Okay,
so
and so for those
starting to normalize back, which is a good thing.
Yeah, and just for those of us who are watching who don't understand all the technical terms that John is using, what he's saying is that here in Delaware, there's first-time home buyer programs. It allows you to get a percentage of help towards those closing costs. So if you were buying a $100,000 home, you could get $3,000 in assistance from this program towards your closing costs if you were able to get 3%. They did suspend that for a little bit of time over the last week and a half, and now it's come back. And although they've reduced it 1%, you're still able to get 3 or 4%, which is huge for people trying to buy that first time home because it covers some of those closing costs that we all have to pay. So
yeah, still, because even like just the 4%, you figure most of our first time home buyers are going to do an FHA loan, which requires them to put down 3.5%. So you're still able to get that whole 3.5% from Delaware State Housing, plus another 0.5% to go towards your closing costs. And then if you got a great real estate agent, which you want a buyer's agent to represent you, they'll negotiate, like Carol will negotiate the seller to pay some of your closing costs. So you can still buy a home right now with very little money out of pocket, maybe $1,500 to $2,000. If we get the 4% and we get the seller to pay closing costs, you might be buying a house with $1,500, $2,000 all in. Inspections, appraisal, deposit.
Right. Wow. And I just want to take a moment. I see Chasten's jumped in and joined us. Richard's there. Jesse's there. Welcome, everybody. If you have any questions, please drop them in the chat down there. I'm doing my best to monitor them so we don't miss any of your questions. What's going on with conventional loans? Are they still flowing? Are the rates back down to where they need to be?
Yep. Conventional is doing the best because that's what the market wants. They want the conventional. The government, they're basically called mortgage-backed securities. They're bonds that are bought and sold on the market. So if there's no one buying, you have a problem. And that's what happened. Everyone stopped buying. The feds jumped in and started buying bonds again. That's what helps the market. But right now, you're going to probably see a lot of banks have already started yesterday and today raising the minimum credit score on government loans.
Okay.
So it's not the government insures it, but they don't service it. And they're not the ones that are on the hook for the default. So the banks are really worried about defaults with people being out of work with lower credit scores. So some of the banks have jumped up to 640, 660, even 680 minimum scores on the government loans.
Okay.
But the conventional didn't go below 620 anyway. But those loans are still doing great. You've still got you can do a 3% down conventional loan as a first-time home buyer through the Home Possible or Home Ready program. So that's still there. That's still great. Delaware Housing has their program for conventional loans as well, and you can do that with the assistance program. Yeah. USDA is still open and funding loans, so that's the 100% financing. For our veterans, the VA is still open, still doing loans. That's 100% findings for the vets. So even though we do have the pandemic going on, everyone's still doing what they can to keep real estate going, because real estate is a huge driver of the economy. So we're still doing all we can to keep it going. So there's still a lot of opportunities. Just real quick, I'm going to show you guys something. Can you see my screen there?
I can, thanks.
Okay, so this is a web page. I'll put it in the chat, but it's DelawareMortgageLoans.net. There's a page on first-time home buyers. So what we're talking about is right here. These are your loan programs. You got an FHA loan, you've got a USDA rural housing loan, a veterans loan, a conventional loan. So when you go to buy a house, for Carol to take you out shopping, since she's a great agent, the first thing she's going to ask for is, where's your pre-approval? So you've got to be pre-approved under one of these 4 programs now: an FHA, a USDA, a veterans loan, or a conventional loan. The 2 that will allow you to buy a house with no down payment is the USDA and the veterans. They have a 0% down. Now, if you still want to get 0 down, you're going to do an FHA or a conventional with a down payment assistance program that still gets you to 100% financing, like Delaware State Housing. But on this page, if we scroll down, here's the programs to help you by county: Newcastle County, Kent County, Sussex County. So here is the SHA's program is now the Preferred Plus. They had 2 other programs that you may still find on the internet, but they're gone. There was a grant program and a small loan. That's gone. They got replaced with the Preferred Plus, and if you click on this link, it takes you to the page. If you want to know about the Preferred Plus, here it is. Yeah. Walks you through the guidelines, walks you through the income limits and all of that.
Okay.
But Newcastle County has a program, their DPS program. So we can click on that. You can get more information there. There's income limits by the household. They give you a second mortgage of up to $5,000 at 0% interest. We also have a Dream Maker program and a grant program. Each one has different credit score guidelines, different income restrictions. And then you can see, if you go to Kent County, Dover First Start has a program. Delaware Housing is available in all of the programs. So the first step is figure out which loan program you're going to qualify for. And then if you need help with the down payment assistance, depending on where you're buying, which program is going to be the best for you.
Okay. And so I just want to recap real quick. For those who've jumped in a little late, John and I are just trying to provide as much market information as we can. There's been a lot of changes in the last week and a half. But if you were shopping for a home, you are still able to go ahead and do that. Here in Delaware, mortgages and mortgage loan officers have been deemed essential personnel, which means they're working, they're taking loan applications, they're processing that, and they're getting you your pre-approval letters. As a realtor, as long as I'm practicing social distancing, I've got my Lysol wipes, I've got my gloves, we can go out and look at homes together. And if you find something you like, we can put an offer in. I'm working with a home inspector who's taking his precautions. He's out inspecting houses. Our attorneys are up and running. They're closing loans. For those who missed it, in the last week alone, you've had 178 homes that have just closed here in Delaware. So that means we have 178 new homeowners here. Congratulations to them. And there's going to be more, because overall in the entire state of Delaware, over 200 houses have gone under contract. So he's providing some wonderful information about the interest rates. For those who don't know, that's John Thomas. His contact information is going to be in the links for anybody. If you have any questions, please post them. We're both here. I work on the real estate side. He works on the mortgage side. We'd love to provide those answers for you. I'm with Remax Premier Properties, and as you can see over here, on that side, I'm a member of First State Properties here in Delaware. So please feel free to reach out if there's anything you think I or he can do for you. He's telling us that conventional mortgages are really still offering some wonderful rates right now. He went over the FHA guidelines for us. He touched a little bit on the VA loans. So John, I'd like to actually go back to the VA loans. First, thank you to everybody who serves our country. We appreciate what you do for us. VA loans. So how does somebody go about applying for that and getting that, nailed down, and what does that look like?
Okay. Yep. So for a VA loan, for a veteran, or, they can be active duty or retired. They can be National Guard. They can be, what you got to do is get what's called certificate eligibility.
Okay.
That's basically the document from the VA that says you are entitled to receive a VA loan. If you don't have a certificate eligibility, you can't get a VA loan. No way around it. So typically what happens is the lender will go to the VA has a website. We put in the veteran's information and we see if we can automatically get the COE, certificate eligibility, online. That happens about 35% of the time because the VA is not great with records. So what will happen, it'll kick us back and tell us to either upload their DD-214, which is their discharge paper, or maybe a statement of service, depending on whether they're active duty or reserves or National Guard. So we upload that, usually takes 2 days to 5 days. They spit back, send us the email me the the COE, or they'll ask for more information because they haven't been able to deem if you qualify. But basically, once I get that COE, that's what you need. You should not be pre-approved by a mortgage lender without certificate eligibility, because if you don't get it, you can't use the VA loan. And VA made a change in January of this year because so many lenders were pre-approving clients without the COE and opening appraisals and starting the process, then finding out a week before closing they can't get certificate eligibility. Lenders now can no longer order a VA appraisal without uploading the certificate eligibility.
Well, that's great.
So as a listing agent, I would advise you to, if you've got a VA offer, say, hey, let me see the COE, or do you have the COE? Because if they don't, they can't even order the appraisal.
Yeah.
And technically as a veteran, you want to make sure, because I can send my veterans a copy of the COE. You're not pre-approved without the COE because that's your proof you actually can get a VA loan. So once you have that, it's just like a normal process. You veterans get a buyer's agent, go out shopping, find a house, run the numbers, make sure they're good, write the offer. Now, one big myth about VA loans is that the appraisals are tougher. And actually, in reality, the VA loan is the only loan program that gives two options for you to get value. The first one is the appraiser will not send a report in below value without invoking something called Tidewater, which allows the VA appraiser to say, hey, I can't get the purchase contract value. Can you help me? The listing agent and the buyer's agent then have a time frame to go find comparable sales to send to the appraiser to support the list price.
That's fantastic.
And if you guys ignore him though, I think it's 72 hours, then he turns the report in with the low value. So that's why you got to have a good agent so that they go get the comps and send it to the appraiser to support the value. Now, if he sends it in and it's still low, VA is the only one that has a mandatory where you can appeal the process to somebody other than the appraiser. On an FHA conventional loan, if you appeal, the appeal goes to the appraiser and he can say, nope, not changing it. In this case, the appeal goes directly to the VA. The VA then has another staff appraiser review it and determine if they want to change the value or not.
Wow.
That's the only appraisal where you get a different party to review the appraisal. Conventional FHA, it's the appraiser that did it. So if he's like, nope, not changing it, don't care, you're screwed.
And
that's actually a huge benefit on VA.
Yeah, I think the VA program is just a wonderful program for our vets, and our active military who can qualify. And just to reiterate, they do 100% financing.
Right, 100% financing. And VA actually has the lowest default of any loan. So they're actually your strongest borrowers. Like if you have a VA loan that's done right, the lender's done their work, got the COE up front, has verified they qualify, those are some of your best, strongest buyers. And some people think your conventional buyers are stronger, but historically, VA loans have lower default rates than conventional buyers, which tells you VA buyers are stronger.
They're stronger. And for those of us who don't know what a COE is, can you tell us what that stands for?
Yep, certificate of eligibility. That's your paper that says you are eligible to get a VA loan.
Okay. And just one last question on that. If it's my understanding that VA loans do not pay PMI.
That's correct. There's no private mortgage insurance on a monthly basis. They do charge a one-time funding fee, but that can be financed into the loan.
Right.
And if you're on any disability, they waive the financing fee. Or there was a new thing, if you've gotten a Purple Heart, this started January, you're exempt from the funding fee.
And that just started in January?
That just started in January.
That's exciting. So PMI, for those of you who don't know what PMI is, it's private mortgage insurance. And for those of us not in the VA, we do pay that on any mortgage loan that we don't have 80% equity in that loan. So if you buy a house for $130,000 and you only put down a couple $1,000s, you're going to pay private mortgage insurance, I believe, for up to the first 10 years or until you have reached 20% equity or more in that home. And PMI, I think I'm paying $60 or $70 a month for PMI, maybe, give or take. So that can equate to a lot of money over the course of a year, over the course of 5 years, 10 years. So the fact that VA steps up and they do not charge that when their loans is like a huge thank you to our veterans. So we appreciate
Yep.
that.
Yep. Now, since you did bring up private mortgage insurance, I do want to mention that private mortgage insurance is not bad. It has the stigma. It's not bad. It's awesome because before there was private mortgage insurance, the only way to purchase a home if you weren't a vet is to put down 20%.
Okay.
So what happened was, they were like, hey, there's this great pool of buyers that could buy a home, but they don't have 20% down. So they went to the banks and said, hey, look, we know you don't want to lend more than 80% of the value of the home because it's too risky.
Right.
If we get a mortgage insurance policy that protects you in case they default, we'll pay you the portion above the 80%. Will you lend it? So the bank said, sure, we'll do it. We're just not paying for the insurance.
Right.
So they said, great, Mr. Borrower, Mrs. Borrower, they're going to allow you to put 5% down. You just got to buy this insurance policy because you don't want to put down 20%. So it's a win-win.
And I'm glad that you mentioned that because a lot of people look at PMI, we talk about the money of it all the time, but we don't talk about the benefit is that it's opened up your ability to buy that house without needing $10,000, $15,000, $20,000 out of pocket up front. If you have a secure job and you've got a couple dollars to cover some of the things up front with all the programs involved, you don't need $10,000 or $15,000 to buy a home anymore. And that's one of the wonderful resources that's helped us get to that level.
Yeah, and even with PMI and everything, with where the interest rates are now, your whole payment, if you're renting a townhouse, your payment's going to be less. So who cares? Like I can actually own a home and pay less than rent. And
right.
Instead of paying my landlord's mortgage, pay my own mortgage. So I just tell people, look, just focus on what's the whole payment. Does it fit your budget? Can you buy the house you want? Great, buy it. Now you're paying your own mortgage. You've invested in your own future. You're now building your own wealth, not somebody else's.
Exactly. I've worked with a couple of buyers in the last couple of months who have taken advantage of these programs. And I got to be honest, it was to my delight how little out of pocket money they had as we went through the process. They paid the earnest money, which is the deposit that you pay when you put an initial offer in on a home. They paid for their home inspection and their appraisals. And then they went to the settlement table with very little money. So they were able to get the keys to their new dream home without going broke, which is exciting to be able to help them through that process. I hope anybody who's watching who has any questions about that, please reach out to John, reach out to myself. I think that we would be more than willing to provide you all that information and ways we can help you with that.
No, definitely.
Yeah. So what other important information do you think people should know?
Well, I'm going to do a quick screen share here.
I love your screen shares. Please do.
Just get a little technical, but I'm real big on educating people. So this is a bond chart of mortgages. And typically when the bond moves 20 basis points, which is 0.2 on this scale, the mortgage rates will go up or down. So to show you, if you look prior to here, you can see very small movements, and it was a slow upward trend in mortgage bonds. And that meant since back in beginning of January, we had this slow movement in rates going down.
Okay.
Now, right here on March 9th, this is when stuff started going nuts. And look, this is why rates spiked up in a couple of days over 1%. Because look, the bond sold off all the way back to where it was in January in a couple of days.
Wow.
Did a recovery. And then look, this is where liquidity dropped out of the market, this huge drop. The rates had been the highest they'd been all year, even back to the previous year. Then this was Monday. The feds jumped in and said, we're going to start buying $50 billion of mortgage bonds because we realize the mortgage market is going crazy. It's selling off. Nobody's buying them. Rates are spiking up. That's going to be bad for everybody during this pandemic. So the feds jumped in. That's what happened. This is what helped the mortgage market. Not the feds dropping the Fed funds rate to 0%, which they did too. It was them buying bonds. And now look where we're at. Bonds now are at the highest they've ever been in history, which means interest rates are now at the lowest they've ever been in history.
Wow.
Now, that doesn't mean you're going to get the lowest rate right now, because a lot of banks, even though the bond is here, are saying, look, we literally can't handle new loans. So that's why it's, everyone's having low rates. But I just wanted to show you guys if this bond switches and sells off, guess what rates are going to do? Going up. But right now, this is the feds in buying supporting the mortgage market, because they can't make rates lower directly. They can only make rates lower by buying bonds. So that's what I'm looking at each day as I'm looking at this chart. Now, the bad news is this red here, the stock market's selling off today. It had 3 days of a rally because they were anticipating the deal being signed, and now there's a pullback in the stock market. And then this is your treasuries. That treasuries are going down. Treasuries go down, typically mortgage rates go down as well. But that's what's going on in the market. And this is what I do as a mortgage advisor. I'm watching this stuff, what's going on with the stock market. This is up my computer every day. So green is good. Green means the bond's going up. Typically rates are going down. So right now is an amazing opportunity to buy or refinance with the lowest rates ever in history. And do they go lower from here? Probably not. I mean, could they possibly? Yes. But if you're waiting for them to go lower, you're crazy. Like now is the time to buy or refinance. This is amazing, amazing, amazing time.
So right now we have Renee in our chat box, and she's saying that she comes from a family of renters, and what we were talking about in terms of like helping people with down payment assistance, and is why she's exactly thinking about buying a home right now. So I just want to say hi, Renee. We appreciate you watching. Please feel free to reach out to John or myself if you have any questions, or if you would like any additional information. We're here. Please feel free to type your questions down here. We would be more than happy to answer them for you. I did put my cell phone down there. You can call or text, and I'll get John's cell phone or his office phone down there for you in just a minute. I do see that we still have plenty of people watching, so I think the next round of information, one thing I did notice is that the stimulus package for the economy has been passed, and they're saying that consumers are going to realize up to $1,200 in funds from the government to just try and help keep the economy moving. So I think that's going to be a great little boost for people to just make sure.
And actually, it'll be more than $1,200. I think you actually get an extra $500 per kid.
Right, per child. So
right, but there is income restrictions on that. So someone that doesn't need it's not going to get it.
Oh yeah, if you made
$100,000
last year, in their minds you don't need it. But
yeah, and I think it's still pretty liberal, because for a married couple, it was over 150, I think.
Yeah, it was
pretty high. So because I mean, even that's still middle class, and if you're experiencing income loss, it doesn't really matter how much you're making if you're losing. You don't have any income coming in.
Right. So I'm pulling up the guidelines now just so I can take a look at it.
Now, there's also a Small Business Administration, this is huge, for LLCs, is doing a streamline loan. And I don't have the details in front of me, but I think it's a rate of 3.75%.
Wow.
It's so streamlined, and I think it's like for up to 12 months to help with payroll. It's supposed to be to help with payroll and stuff like that. So you can go to the SBA website and get information on that. But I mean, it is super streamlined.
Yeah.
And you don't have to go to a lender for that. You go right to the SBA directly and apply with them. So that came through. That's huge as well for local small businesses that might need a lifeline to help with payroll and expenses as we go through this.
Yeah, that's exciting information. So other stuff in the housing market. Oh, John, we lost you. You there?
Yeah, I'm
yeah,
here.
there you go. For some reason,
okay.
It sounded on my side. So hopefully everybody else heard it. I've been kind of going over some stuff. There's definitely some information that I did want to share. Renee, being a renter, kind of reminded me that I had this here for you. I just want to take a second to pull it up. Here it is. Okay, so right now, come on. I'm waiting for it to load. There we go. Okay, so the housing assistance program there is here in Delaware there's up to $1,500 in emergency assistance for renters. If you're a renter and you need a little help right now, you want to go to DelawareStateHousing.com, de.gov/coronavirus. And just look that information up, see if you're eligible, and if you are, go ahead and apply. They're trying to offer assistance if you need it. There's also, if you go to Delaware.gov, like I mentioned, they're also just kind of trying to address as many issues as they can for those of you who are just feeling a little bit of the financial heat. But for those of us who are out here, we're still working, realtors, I'm still showing homes. I've got gloves, I've got Lysol wipes. We're taking all the necessary precautions, but I do have active buyers right now that are looking at homes. And in the last week alone here in Delaware, 224 houses have been sold. So if you're still thinking about buying a house with what's going on, John's here to help you take advantage of fantastic interest rates. And I can help you find that exact home. And we can take all the precautions and do it safely, but it can get done. So is there anything else that you think that we should know about the mortgages, or do you want to talk a little bit about the mortgage process, and has that changed any with everything that's going on?
Yeah, there has been some changes. The biggest change is right at the end. Lenders are required to do a verification of employment
Okay.
on most loan programs to verify the borrower's still employed so that they're going to be able to make the payments on the mortgage. That is going, be an issue for some people because they could be, losing their employment. Typically, you've got to do a verification of employment within 6 days of closing. That is getting changed by a lot of banks right now to 3 days within closing
Okay.
to verify that because of the, mandating shutdown and all that kind of stuff, the borrower is still working in order to purchase the home because, if the borrower buys and isn't working and defaults, banks aren't, in the business of taking losses. So it's to protect them. And so that is the only thing that's really changed is banks are getting really diligent on trying to make sure the borrower that is buying the house is still employed so that they can make the payment.
Okay. I do want to talk a little bit too. I don't know that our viewers are aware of this, but once you have applied for a mortgage, there's a few things you don't want to do. I always try to make sure my clients are aware of it, and I'm glad John's here to talk about this with me today. I have clients and they're like, oh, I'm going to go apply and get furniture. And I'm like, stop. No.
Right.
Not want to make any changes to your credit once you've applied for that mortgage because they're going to run your credit at the settlement table, aren't they?
Well, there's two things. We're required by law to monitor the credit, and we can do that one of two ways. We can repull the credit report the day of closing, or we can have a credit monitoring service where we get alerts anytime someone checks your credit. Right. Most banks do the credit monitoring service. That way they get alerts anytime someone checks your credit. And you are obligated not to change your credit profile until the day after closing. So if you go settle in the morning and go buy a car or finance furniture, the lender won't get the alert till after closing, but they still have to go back and re-underwrite your loan. And if you no longer qualify, they have to, they're probably going to foreclose because you basically materially changed your credit profile before midnight the day of closing. You're obligated to keep your profile the same. So you should not be don't give anyone your social security number until the day after closing.
And just so for those of us, I'm big on simplicity and easy to understand terms. What he means by credit profile is when a bank processes your loan, they look at everything about your life. What debt do you have hanging out over your head right now? What income do you have? And they assess what they call a debt to income ratio. So everything is based on that information. And what he's saying is if you go out and you take a loan, it changes all that information. And so that can mean you don't get the loan and all you bought was $100 a pair of shoes and some jeans for no other reason than you opened a credit card and you changed your credit profile. So you really want to be mindful of that. And
don't quit your job.
Don't quit your job.
Because we have the verification employment we have to do,
Right. I tell them, I'm like, don't change jobs. Don't go out and do anything with your credit. And what's interesting to me, John, is that most people don't realize if they co-sign for someone, that can also change the credit profile. What can you say about that?
Yeah, if you co-sign, you're now obligated on that loan. The only way we can exclude a co-signed debt is if you have 12 months on-time payments from the borrower on that debt from their own account that you're not on. So if you co-sign today and you can't qualify with that new loan, you've got to wait 12 months and you got to make sure that person you co-signed for has made 12 on-time payments from their own bank account and is willing to give us 12 months bank statements. Otherwise, we have to count it against you. And my philosophy is on co-signing is if the bank who really understands who pays and who doesn't won't give this person a loan unless you co-sign, you better be expecting you're going to have to make that payment or your credit's getting trashed because the bank's saying, look, we don't think this person's paying. We want you to go on the loan so we can go after you.
And, that's so true. I think that's one of those things we kind of learn our little lessons in life. And we never borrowed that experience, unfortunately. But I hope that anybody watching today will just take that advice. Don't co-sign for nobody, but especially not once you apply for that mortgage. You don't want to apply for any credit cards, car loans. You don't want to co-sign for anybody. You don't want to change jobs. You don't want to just make any drastic moves either financially through your checking account. You don't want to apply for a mortgage and then go and put a $10,000 deposit in there. because they're obligated to find out where that money came from, because they got to make sure that you're not laundering money or you're a terrorist or anything. So
Yep.
you're going to then have to prove where this money came from. And I'm not saying that's a bad thing. I'm just saying situationally awareness, being aware of what's going on. You might want to hold off on those large deposits until afterward. Otherwise, you have to provide a copy of the check, an explanation of where the money came from, and proof that that's where the money came from. So I recently had a client who their parent had gifted them money to buy a house. That's perfectly legal. They deposited the check into their account and they didn't make a copy of it. And so they had to kind of jump through a little bit of hoops to get a copy. And of course, just write an explanation letter to the bank, like this was the money, this is where it came from. Once the bank could trace the money and they saw it didn't come from illegal activity, everything was fine. It's just a little bit of a hassle and you don't want to put yourself through. And certainly if you can't explain where the money came from, if you have $5,000 under your mattress that you've been quietly saving for the last 8 years, it's not a good time to drop that in the bank.
Right. Or I always tell people, if it's been in your account for 60 days, I don't care where it came from. Don't tell me. I don't want to know.
Okay.
So if you've got 5,000 under your mattress, drop in your account now, and 60
then
days from now, we don't know where it came from. We don't have to source it.
So we have Renee Hilton here in our comments, and she's asking us if there have been any changes to the first-time home buyer program during this time. Renee, we kind of covered this a little bit, but
the only change so far is for the Delaware State Housing Authority programs. The only one I know of that's had a change so far. They offer their Preferred Plus program, which will lend you between 2 and 5%. You get to pick it based on what you would need. The interest rate is based off which one you pick. So the more assistance you need, the higher the interest rate on the first mortgage. And the reason why, that's how they give you the money, based on that mortgage they're getting. They have rebate if it's a higher rate, and the rebate they're giving back to you as the assistance. So the only change right now is the first change was the 4 and the 5% were suspended when we had the liquidity issue in the market. Now we have 2 through 4% available. So the 5% as of this morning was still not available.
Right.
Now the rate spiked up, but the rate has come back down. The rate on the 4% today, I think, was 4.5 or 4.625. So that's the only change we've had so far in the marketplace with down payment assistance programs. Now, as this goes on, this is a very fluid situation with banks and lenders. So we could see credit score minimums going up. We've already seen that with some banks because they're worried about defaults. So they want to take, obviously if you have a lower credit score, you're a higher risk for a default because your score is low because you've had trouble paying stuff. That's why we could see right now the Delaware Housing's minimum credit score is a 620. They have not put anything out that they're changing it, but they could be forced to change it because the marketplace, because they sell their loans to Lakeview to service. Well, if Lakeview says, hey, we're not buying anything below 640, well, then Delaware Housing is going to be forced to go to 640. Has not been said yet, but if things don't get better on the market, that could be coming to protect them from future defaults until this, people start going back to work and that kind of stuff.
Okay.
So we could see a short-term change. Hasn't been yet.
Okay. Well, I hope we hope that answers your question, Renee. If anybody else has any questions, please go ahead, just drop it down there in the chat. John and I are here to answer it. I'm covering real estate questions. He's covering mortgage questions. So don't hesitate to chat. I see a couple people have jumped in here. Hi, Chad. We appreciate you coming in and joining us. Pat, I see you there. Don't hesitate to ask any questions. I see Frank jumped in. Jessica jumped in. Hi, Darlene. And Tara jumped in. So please share any questions that you have. We would love to answer them for you. I'm
going to show something real quick for anyone that's trying to decide whether it makes sense to buy a home or not. You see that screen?
Yes, and it looks good.
So the Federal Reserve does a study on the U.S. economy every 3 years, and this was from 2014. The average net worth of a homeowner was $195,400. The average net worth of a renter was $5,400.
Wow.
Now, they released the stats for 2017. Guess what do you think happened to the average net worth of a homeowner? It went up. It's over 200,000. Guess what happened to the average net worth of a renter?
It went down?
It went down. It's below 5,000. And the reason why is if you get a house today, you get a 30-year fixed rate mortgage. You pretty much fixed your housing payment for the next 30 years.
Exactly.
Well, if you're renting, I mean, what happens every year when your rent renews?
It goes up.
It goes up. Now, wages have not traditionally been going up the last 8 years. So rent's going up, but you don't get a raise. You know, you have less money to spend because your housing payment's increasing, but your income's not. But now if you fixed it on a 30-year fixed, if you do get a raise, you've got more discretionary income. Plus, buying a home is the only investment opportunity ever where you're going to, if you're renting, you get to take money you're already spending and now invest it in something. If you want to go buy stocks because the stock market sold off, you have to find money from somewhere else to buy the stocks. Exactly. This is your only opportunity ever in your life to take money you're already spending on rent and move it over to buying your house. And now you are investing that every month in the equity in your home.
Right.
It's a huge opportunity.
You know, and I hope that people really understand what you just said, you know, because the ability to take money you're already spending and now spend it in an area that builds wealth for you is an amazing opportunity. I hope everybody will take advantage of in their lifetime. Because like you said, rent goes up every year, but your mortgage payment stays the same. And a lot of people, you know, I would like to just point out, I've had a lot of questions in the last 6 months over how does homeowners insurance work and taxes work? And, you know, your mortgage companies are escrowing that. Can you tell us a little bit about how that works and how they are allowed to shop if their homeowner insurance goes up?
Right. So your mortgage payment traditionally includes the principal and interest, which is the part that's fixed for if you get a fixed rate. If you get a 30-year fixed rate, which is what I recommend for most first-time buyers, that part is fixed for the whole 30 years. Now, we also roll into that your property tax and your homeowner. So in Delaware, your property taxes are paid once a year. Bill comes out July 1st. It has to be paid by September. So what we do is divide that by 12 and we add that to your monthly mortgage payment. Now we do the same thing for your homeowners. Your homeowners are going to renew every year on the anniversary of when you bought the house because that's when you got the policy. So we divide that by 12 and add it to your payment. So we call that PITI, principal, interest, taxes, insurance. So when you're budgeting for all of that. Now you may also, if you have mortgage insurance, then it's PITI plus MI. That's your total mortgage, your payment you're paying every month. So that's all included. So you don't have to worry about budgeting separately for your homeowners or your property taxes. Now, if your homeowners does go up, you can shop around for it. And 60 days before the renewal date, they send you out something in the mail. Make sure you open it, see if it went up or down. And at that point, because if you don't, it automatically renews because the lender's going to pay it. Bill's going to go to us and we pay it. Because what happens is every month when you pay us, the principal and interest goes to pay the mortgage. The taxes and insurance actually go into a separate account called an escrow account that we hold for you. And then that money sits there and builds up till we get that homeowner's bill, we pay it out. And then in September, we pay out your property taxes. Now, if your property taxes or your homeowners do go up, we pay it. And then at the end of the year, typically in December, we review your escrow account. And if it's short because those bills went up, that's where you're going to get something from us saying, hey, Carol, you're short $130. Send us a check in the next 30 days. If you don't, we're going to divide that by 12 and add it to your payment for the next year.
Right.
So that happens every year. You get an escrow statement review.
Yeah. So just to clarify for the homeowner's insurance, if my mortgage payment, and I realize that my homeowner is just going to go up $150, I have a 60-day window to shop that with other companies, decide if I want to switch companies, and the mortgage company will redirect my insurance payment to the new company so that I don't have to worry about it going up. And
you have to do that at that specific time because if you change after that, you've got to front the money, which is fine if you have it, and then you get a refund, a prorated refund from your current carrier.
Exactly.
So if you get a better deal 2 months in, you front the money for the new policy for 12 months, and then your current policyholder will refund you 10 months prorated.
Okay. And what can you tell us about how when you pre-qualify somebody, okay, and let's say, they pre-qualify, they can spend up to $200,000 on a home. How do you determine how much money a person can spend?
Well, typically, I don't like to go to what's your max pre-approval because that's not really important. What's important is I'll say, Carol, what's the most you can afford to spend every month on the mortgage payment?
Right.
So if you tell me $1,200, that's the most that fits your budget. Well, then my job is to turn that into a purchase price so you can then go shopping and then use the agent know what homes to show them. So how much that's going to turn into is really going to depend on a lot of factors, you know, loan type, down payment, all of that. So most of our first-time home buyers will probably be getting an FHA loan. Unless they're a veteran, they'll get a VA loan. But basically, I take that $1,200 for which will be PITI and MI, all that we just talked about, that whole payment. And then based on the FHA, I'll turn that into a purchase price. Now that purchase price can change if the rates change. Like rates drastically went up, so your buying power went down. Well, now they're back down, so your buying power went back up. So that's why sometimes you've got to make sure the house you're looking at still fits your budget. So what I recommend is, hey, we give you a general pre-approval to go shopping with. We don't have a property, so that's based off some estimated taxes, some estimated insurance, based off where you're telling us you want to look. Okay. But what you should do is, hey, John, we found a house. You send it over as the agent. I run the numbers, purchase price, down payment, how much money we need from the seller and closing costs. So you're writing an offer specific to that property, and you have real time. Hey, here's your payment. Here's your cash to close. Are you good with that? If they are, go ahead and write the offer. If not, then let's see if we can tweak. So this process is an evolving give and take, back and forth. We have to be a team with you, the agent, and the buyer, property per property, so we can do stuff. Because one of the things is, if you're pre-approved and you're looking at townhomes and then you switch to a condo, well, your pre-approval is null and void now, because I've got to redo it. Because if you're looking at a $150,000 townhouse and you go to a $150,000 condo, you may not qualify because you got the same mortgage payment, but now you've got a condo fee of $200 to $500 per month.
Exactly.
Now, if you're looking in Newcastle County and you jump down to Kent County, well, your pre-approval may actually go up based on the payment you want, because the property taxes are much lower. And you jump to Sussex County, Sussex County, your property taxes might be $600 for the entire year on a $250,000 house. Well, that drastically changes what you qualify for. So you start with a general pre-approval based on the loan type, down payment, and all of that, and the area you're looking. Okay. Now, some of my clients may get pre-approved on 2 loans. Like, let's say you're like, hey, John, I'm looking in Middletown, Bear, and Newark, and I qualify for USDA, and I want to do that 0 down. Well, great. Problem is, Newark doesn't qualify for USDA, but you're looking there. Middletown does, but not the city of Middletown. So I'm going to give you 2 pre-approvals, a USDA and an FHA. Maybe the FHA with the down payment, USDA no down payment program, because you get 100% financing. And then which one we pick now depends on what?
Your house.
So we got to look up the house. Is it in USDA eligible? We go with the USDA. If it's not, we've already got the backup. We already know we're going to go FHA if it's not in an eligible area. So that's where you've got to be working with a team that can understand your needs and that kind of stuff.
And a team that understands that these options are available to you.
Right.
Because if you have a team that doesn't know there's an option out there that provides you 100% financing, you might never know that it's available to you.
Right. And speaking of that, I want to show you, I'm going to do a screen share real quick, because I see a lot of clients. They actually call me. I didn't do their loan, but they call me because they find my web page on the internet. And this is what they use. This page is what they find.
Okay. While he pulls up his page real quick, when he had mentioned talking about your buying power, I just want to make sure everybody understands what that means. Lower your interest rate, the more money you can spend on a house. So if you qualify for a 4% interest rate, obviously your payment's going to be a lot lower. So you'll be able to buy, instead of a $120,000 house, maybe a $140,000 house. But if that interest rate goes to 5%, now instead of buying a $140,000 house, you might only be able to get a $120,000 house, because the payment stays the same regardless. So you definitely want to get in there when the interest rates are lower, because it gives you more buying power, which means you're going to get more house for your money for that same payment than if you wait 6 months and the rate goes up a basis point. So I hope that anybody watching will get in there and take advantage of that. Oh, tell us more about this screen.
Okay, let me.
Oh, it came up and went down.
Yeah, I'm going to. All right, can you see it now?
Yeah, there you go.
Okay, so it's called the Delaware Mortgage Credit Certificate, which nobody knows what that means. So it's nicknamed the Delaware First-Time Homebuyer Tax Credit Program. I see a lot of buyers miss this because their lender doesn't do it, especially a lot of veterans. For some reason, veterans get hooked up with a company that advertises on the internet that has veterans in their name, and they think somehow they're working with the VA. The VA doesn't do loans.
Right. This
program you can only get through a lender in Delaware with an office in Delaware that's on Delaware State Housing Authority's program. And if you don't get it when you buy the house, you can never get it.
Okay.
That's why it's huge. You can't go back and get it. And what it does is it gives you, there's household income limits. And if you're under those income limits based on the county and the number of people, you get up to $2,000 every single year on your federal tax return as a credit. Now, how much you get depends on what interest you pay. Basically, they take 35% of the interest you pay in an entire year. So if you look here, let's say you paid 10 grand in interest, 35% of that is $3,500. That would be your tax credit, except it's capped at $2,000. So you would get the full $2,000 tax credit. Now, if you rolled in this program, you have to go claim it on your tax return or you don't get it. After you close, if your lender enrolled you in the program, you'll get in the mail from a company called Hilltop Securities a mortgage credit certificate that has your certificate number on it. You need that when you file your tax return. Now, if you pay at least $5,800 a year in interest, you will get the full $2,000.
Wow.
This is an amazing program that a lot of clients, first-time homebuyers, don't take advantage of because their lender or their realtor do not tell them. Right. So, for example, if your realtor gets your name from your lender that might be Veterans United, well, that agreement that realtor has with Veterans United is they're not allowed to tell that veteran about any other programs or any other mortgage companies, or they will no longer get leads. Well, the problem is Veterans United is not enrolled in this program, so those veterans are missing $2 grand a year on their tax return. Wow. What if they keep that loan for 30 years? That's $60,000 that they miss because their lender didn't do it, didn't know, and or the realtor didn't do it, didn't know, and somebody didn't tell them they should enroll in this program. To me, it's criminal. But there's no way you should not present this to every buyer that qualifies, because that's an insane amount of money over time. And that's where working with a team of professionals that's going to look at your file and say, look, hey, look, I see you got a pre-approval from Quicken. How about you're a first-time home buyer? You need to talk to a local Delaware lender so that you can take advantage of these programs, because, the down payment program we talked about earlier when they asked the question, you can't do that if you're an out-of-state lender, an internet lender, or a credit union or a bank that's not signed up. You missed all these programs. So it's huge that you work with professionals, especially as a first-time home buyer, that has all this information.
And we'll put that web address right in the links here for you, so that you have it available. You can refer to it. Please feel free to call John or myself. We'll provide you any information if you've missed anything that we've talked about. We're coming near the end of our hour. Is there anything you want to recap or touch on again before we leave, John?
No, I think we did a pretty good job. If there's any questions in the chat, it's just an amazing time to buy, even though we're going through the pandemic. Delaware is open for business for real estate. They understand that that's a driver of the economy. Yeah. The quarantine is there. We take precautions. Expect to wear gloves and have a lot of sanitizer so that when you go in houses, you come out, you're not touching the hard surfaces, that kind of stuff. You can still do the tour. The realtors are doing a lot of more opportunities with the pictures and stuff so you can see the house, and then you make sure you like it before you schedule that tour. But we are open for business. Lenders are doing loans. Attorneys are doing settlements. Realtors are showing homes. Realtors are putting new homes on the market every day. And these rates are crazy, like I showed you earlier. There's all these programs, down payment assistance, mortgage credit certificates. You've got the different loan options that are still there. FHA is open for business. VA is open for business. USDA, conventional, Fannie and Freddie. Everything's open for business. Do not wait. It's crazy. It's crazy. Crazy time.
John's open for business. I'm open for business.
That's right.
Work with a team of professionals like John, where we're taking all the necessary precautions, but we're out here and we're doing the job because we understand that even though there are some things going on in the world, there are people who need to move. There are people who need to sell their house. And so they're trying to find, who should I work with? We want to let you know we're here. We're taking the precautions. We're being professional, but we are available. My home inspector's taking precautions. He's out inspecting homes. John's taking loan applications and doing what he has to do. And the attorneys are doing closings. It's my understanding the attorneys are doing what they call separate room closings. And what that means is they're putting the buyer in one room and the seller in a different room, and then they're carrying the documents back and forth. They've requested that realtors actually not attend closings right now so that they can reduce the number of people there, all in the interest of social distancing and just making sure everybody's safe, but still working, still getting it done.
Yes.
Yeah, so if you need any additional information, please reach out to John. I've dropped his website in the links a couple of times now. He's, readily available to answer you. Primary Resident Mortgage Inc. If you didn't find the link, you can go ahead and just Google him. John, give everybody your phone number.
302-703-0727. And you can find me on the web, DelawareMortgageLoans.net. Ton of resources. I was showing you different posts from that page. Information on every loan program, everything you need.
And I just dropped his link to Delaware mortgageloans.com in the link in the chat.
.net. Make sure it's .net.
So you can find him. I'm Carol Fahy. I'm with Remax Premier Properties. I am a member of Team First Aid Properties here in Delaware. My cell phone is 302-217-3063. I'm dropping that in the chat for you right now as well. You can call, you can text, or you can email me at carol.fahy@remax.net. So on that note, I think that we're going to go ahead and call this a day. We want to thank everybody who came and watched. Again, if you have any additional questions, you can email either one of us and get those answers. We're always available to help. John, any final thoughts before we close?
Now, we're here to help. We'd love to work with anyone that's just trying to figure out the process, whether it's purchase, refinance, list your home. We're here to help.
Yeah. All right. So on that note, we're going to go ahead and go. Thanks everybody for watching. We hope you have a great day.